Bitcoin has gone from looking strong to inherently weak. Let's quickly recap what I mean by saying it in fact did look strong just recently. Up until last Tuesday, Bitcoin retested a horizontal level from above from what we initially thought was an ascending triangle, although we did identify that it was an ascending channel long before it in fact broke out of this line. This coincided with a support of the EMA 200 line, and on top of that, the price consolidated nicely in a little action lump near the resistance. This all combined sure paved the way for a nice move and eventual breakout on the upside. Sadly, however, Bitcoin blew its chance. And this move right here was confirmed by last Wednesday's plunge through it all. Now, Bitcoin might still be bound in its ascending channel range, but that does by no account mean it's looking promising. This emerged technical weakness and how and why it can be very dangerous is exactly what we'll go through in today's episode. For whether Bitcoin ultimately breaks up or down from this channel, we are in fact in for a major price move, a serious dump or a serious pump. And given the current technical state, the bias does severely favor the downside, and if that were to materialize, then it could prove disastrous for Bitcoin and its bulls. But first and foremost, not financial advice. Everything I say is for entertainment purposes only, and if this episode helps you better understand Bitcoin's true state and what can be expected ahead, then please return the favor by hitting the like and subscribe buttons. It keeps the algorithms happy and the channel nicely going, for your engagement is my barometer. The more response the episodes get in relation to views, the higher the frequency they'll be produced with. With that said, there are three things that we'll discuss in today's episode that represent the basis of our updated case. Three things that can cause some serious damage. Let's begin with the simplest and most powerful case clues of them all. So far in this ascending channel, we've had no less than 7 touches on the diagonal support. And as we all know, the more times a support or resistance is being tested, the weaker it gets and the stronger the ultimate price reaction. Normally, we see 3 or 4 touches prior to a breakout, just as we did on the resistance side of this channel. Here, on the other hand, we're already at 7, which means that a potential break below this channel would take place on the 8th try. Now, ladies and gentlemen, 7 confirmed touches are rare, and this alone is cause for concern for the bulls. What I'm saying here is that if Bitcoin were to break below this channel, then we have good technical reason to expect a severe price reaction, or put plainly, a steep and aggressive price plunge. And if we zoom in a bit here on the 4-hour and here on the 1-hour chart, it is obvious that the price is consolidating. Naturally, this might be an accumulation, but statistically and until proven otherwise, this here remains a consolidation with a strong bias to continue along with the trend, as in downwards. And to those of you who may not know, a price that consolidates at support or right beneath resistance is a strong statistical sign of a breakout. And this is something we brushed over in a recent episode when Bitcoin was hovering around below its channel resistance. Now, on the other hand, the tables have turned, and if the price action were to remain gathered near the support, it's no good news for the bulls, however counterintuitive as it may sound. Given though that we've just hit support, we may expect at least a minor bump up. However, the significance of any such bump will be a proper clue enough on its own in terms of the strength of the bulls. For the less of a price reaction we see here in terms of a percentual bump, the worse it is. With that said, the one and only thing that could cause me to change my mind and happily enter a long position in this neighborhood right here would be if we were to get a buy signal on the RSI. Unfortunately, however, we're nowhere near such thing. The final clue is perhaps the most reliable one. On the daily chart, Bitcoin pushed through the lower bullish red line with ease and did not stop until a weak reading of 35. And since then, the RSI is struggling to break above the lower bullish red line from below. So far, and until proven otherwise, this here is a severe sign of weakness. An RSI line that fails to break above any of these 3 RSI lines from below is what we commonly refer to as a bearish motorway. and the lower the RSI line of resistance, the weaker the momentum. The daily RSI offers legit cause for concern on its own, neither do things look any sunnier if we zoom onto the 8-hour chart. Also here, the RSI is struggling to break above the lower bullish red. In fact, it has thus far not even come near it. Neither do we get any isolated hope in the shape of a bullish RSI divergence. Instead, both the price and the RSI keep trending downwards. This all here so far, ladies and gentlemen, is weakness in action. Weakness confirmed. And finally, if we take a look at the 4-hour chart, it offers little to no more hope to cling onto. Now, amidst the first half of this downwards trend, the RSI barely even made it up to the upper bearish blue line. And during the second half, it struggled to break above the lower bullish red one. Sure, we have two exceptions here, but neither of them has thus far crossed above the neutral green 50 line. And as we established before, any RSI that struggles to break above this line, and this line from below make up for incredible weakness in the shape of a bearish motorway. To sum things up, despite this afternoon pump, Bitcoin still looks exceptionally weak. And unless we can see some sudden rays of bullish light, we are highly likely in for a dramatic move to the downside. And if I were a Bitcoin bull or just heavily invested in Bitcoin, I'd proceed with the utmost caution over the upcoming few days or weeks. All bearishness aside, there are still things that speak in favor of an upwards move, although they're overshadowed by the bigger case picture, as outlined in full in this very episode. The first is how the lower bullish red buy signal on the weekly is still intact. Secondly, the ABCDE triangle case still remains valid. And finally, we got a close outside and below the Bollinger Bands upon Monday's closing. These three technical musketeers sure bring hope to the table. However, as a first step to rule out the emerged weakness, we first of all need to see a steady move up towards at least $46,000 before we can once again put our bullish horns back onto our heads for a swelling low-risk moon case.